All right, learner, buckle up. We're doing a deep dive today. Yeah, we're tackling that mid-year outlook report, 2024.pdf, the one you sent over.
Lots to unpack there.
It really is. We're talking global economy, interest rates, AI, you name it. But don't worry, we'll break it down and figure out what it all really means for you. Ready to make sense of it all? Expert speaker.
Absolutely. Let's dive in.
Okay, so the report doesn't sugarcoat things.
Mm-hmm.
Right off the bat, it highlights some pretty stark realities. Inflation is stickier than anyone hoped. Central banks are being really cautious with those interest rates. And geopolitical tensions, well, they're certainly keeping the markets on edge. What's your take on this big picture, expert speaker? How do these things all fit together?
It's all connected. The report really emphasizes that. Take inflation being sticky. That's a huge factor in how central banks are approaching interest rates.
Makes sense. They can't just ignore that.
Exactly. They were hoping for a quicker return to normal, but it's becoming clear that's not happening. We're in for a longer, bumpier ride when it comes to interest rates.
Which has huge implications for, well, anyone thinking about loans, right? Mortgages, car loans.
Absolutely. The report actually compares interest rate cut expectations from just 6 months ago to today. And wow, what a difference. What looked like a potential quick fix is now.
Well, central banks are being much more cautious. This isn't a sprint, it's a marathon.
So what does that actually mean for the average person?
Well, for starters, it means planning for higher borrowing costs to stick around, at least for now. This isn't the time to assume those rates will magically drop back down anytime soon.
So patience is key.
Yes, and adaptability. Set it and forget it investing. Not in this climate.
It's more like nimble and active, right? But what does that kind of investment strategy actually look like, especially for someone who's not, a financial expert?
It's about staying informed, for one, and diversifying your portfolio, not putting all your eggs in one basket, and being ready to adapt as the situation changes.
Which it inevitably will. Exactly. This might mean exploring different asset classes, rebalancing your portfolio more often, or even considering alternative investments.
Like what? Give us some examples.
Well, hedge funds, for instance, can be a good option for navigating volatility. They often use strategies to generate returns, whether the market is going up or down.
So they're a bit more, shall we say, unconventional?
They can be, yes. But in times like these, thinking outside the traditional investment box can be a good thing.
Speaking of shifting strategies, the report also suggests looking beyond those mega cap stocks. The Apples, the Amazons, those tech giants that have been dominating the market.
Right, like they're saying, hey, the party's not just in one room anymore.
Exactly.
Yeah.
So diversification is key, like you said. What else are they suggesting we keep an eye on?
Well, while these big tech companies have obviously seen incredible growth, the report highlights smaller companies, particularly in the U.S., as being poised for a comeback as interest rates eventually fall.
Okay, so opportunity is knocking beyond the usual suspects. Got it. Now, this next part really caught my eye. Even the world of private equity is getting a makeover, it seems. Longer hold times, more focus on actually adding real value to companies, not just relying on cheap capital. What's driving this shift?
It's a recognition that the old playbook, quick flips, financial engineering, it's not as effective in the current climate. There's more emphasis on operational expertise, on strategic vision.
So less about the quick buck and more about building something sustainable.
Exactly. Private equity firms are realizing that to generate those long-term returns, they need to be more involved in building strong, resilient businesses. It's about thinking long-term.
Which makes sense, especially given all the geopolitical uncertainty the report talks about. Ukraine, the Middle East, it's a lot. Feels a bit like we're living in a geopolitical thriller, to be honest.
It can feel that way, yeah.
So how can investors even begin to protect themselves when the world feels so unpredictable?
That's the million-dollar question, right? Well, the report cites Goldman Sachs, and they suggest a two-pronged approach.
Okay, tell me.
First, balance your portfolio across different asset classes. Don't put all your eggs in one basket, as the saying goes.
Makes sense. Spread the risk. What's the second prong?
Consider alternative investments. We already touched on hedge funds.
Right.
But they also mention gold.
Gold, like the actual precious metal. Is that coming back in style? I thought that was yesterday.
It's interesting, isn't it? Gold often reemerges as this safe haven asset when things feel uncertain. Unlike stocks or bonds, you can hold gold in your hand. It's tangible, and it tends to hold its value pretty well, especially during times of, geopolitical turmoil like we're seeing now.
So it's a hedge against global risk.
You could say that, yes.
So are you saying our listeners should be rushing out to buy gold bars?
Not necessarily rushing out, no. But it does highlight the importance of a well-diversified portfolio that includes assets like gold. It's about having a mix of investments that can, weather different economic storms.
So it's all about having a well-diversified portfolio that can handle whatever the economy throws at it. Okay, I'm picking up what you're putting down. Now, on to something that, frankly, sounds a bit ominous. The report talks about security is the new black.
Yeah, that definitely caught my eye too.
And they're not talking about the latest fashion trend, right?
Definitely not. It's about fortifying the essentials, the things we rely on. Think supply chains, access to crucial resources, national
The
defense.
foundations of, well, everything.
Exactly. And these areas are seeing a surge in investment, which makes sense. The report really hammers home the point that this isn't just a passing fad either. It's a megatrend here to stay.
So less about the latest gadget and more about ensuring stability and resilience, right? Got it. But how does that translate into actual investment opportunities, for our listener who's trying to make sense of all this?
It's actually a pretty diverse set of opportunities across different sectors. Cybersecurity, for one, protecting our digital world is becoming more critical than ever. Then you've got companies involved in things like critical mineral extraction. We're talking about reducing our reliance on just a handful of countries for those essential resources. And of course, defense contractors play a role here too, strengthening national security.
So a lot of different ways to potentially tap into this heightened focus on security. Okay, I'm making a note to do some more research on those sectors later, but looking beyond the current landscape, the report also dives into those larger forces shaping the future,
Yeah.
right? The megatrends.
Right. It's not just about weathering the storm today. It's about understanding the currents that will shape the next decade and beyond, which is what megatrends are all about.
Exactly. So what are the big ones we should be paying attention to? What's keeping you up at night, expert speaker?
Well, the report highlights 5 key megatrends: decarbonization, digitization, deglobalization, destabilization, and that one refers to the whole geopolitical landscape, just to be clear, and finally, demographic aging.
Okay, let's see if I can summarize that. We're talking about the shift to cleaner energy, the ever-expanding role of technology, the restructuring of global power dynamics, and, oh yeah, the fact that the global population is getting older. Did I get it?
You nailed it. And the real challenge and the real opportunity lies in understanding not just what these megatrends are, but how they interact.
Because they don't exist in a vacuum.
Right, exactly. Take decarbonization, for example. That's driving huge investments in renewable energy, right?
Yeah.
Solar, wind, all that. But that shift, it depends heavily on digitization.
For things like smart grids, managing energy use, even in things like electric vehicles.
Exactly. AI is playing a role there too, by the way.
Yeah.
But you see what I mean? It's all connected.
And we can't forget about those critical minerals needed for batteries and all sorts of green technologies, right? Which brings us right back to resource security and geopolitics. It's like a giant game of interconnected chess.
Precisely. And that's why ignoring any one of these megatrends is a recipe for getting blindsided down the road.
Interconnectedness is key. I'm hearing that loud and clear. Now, let's shift gears a bit and talk about something that's been generating a lot of buzz, AI. Is it really as transformative as everyone's saying, or is this just a case of, overhyped tech trend?
There's definitely a lot of hype, no doubt. But the report makes a strong case that AI is more than just a fad. It has the potential to fundamentally reshape, well, pretty much everything.
Everything. Okay, now I'm both excited and a little terrified.
I hear you. It's a powerful technology, no doubt. But here's the key thing to remember. In the age of AI, data is king.
Data is king.
Hmm.
What do you mean by that?
Think of it this way. Companies that have access to the highest quality data, the most comprehensive data, they're the ones who are going to have a major advantage when it comes to actually developing and using AI solutions effectively.
So data is like the new oil fueling the AI engine.
Perfect analogy. And that's a crucial point for investors to understand. It's not enough to just look at a company's AI capabilities in a vacuum. You've got to ask, what data do they have access to? How are they managing and using that data? What's their data strategy?
It's like evaluating a restaurant. You wouldn't just focus on the chef's skills, right? You'd want to know where they're sourcing their ingredients.
Exactly. You can have the most talented AI engineers in the world, but without that high-quality data to train and feed those algorithms, their potential is limited.
So, learner, if you're considering adding some AI exposure to your portfolio, add data dominance to your checklist. But what else should we be looking for? Expert speaker. What other factors come into play when you're evaluating AI-driven companies?
Well, for starters, don't get swept away by the hype. I know, easier said than done, right? But seriously, look beyond the flashy promises, the buzzwords, all of that. Focus on companies that are using AI to solve real-world problems, to create tangible value.
Practical applications over shiny objects.
Got it. Exactly. Look for companies that have a clear vision for how AI fits into their overall strategy. How is AI making their products better, their processes more efficient, or even opening up entirely new markets for them?
So it's about looking beyond the AI glitz and glamour and really getting down to the nuts and bolts problem-solving tangible value.
Makes sense. It's all about separating the wheat from the chaff, so to speak.
Exactly. Now, you mentioned something earlier that I wanted to circle back to a company's track record. How important is that when we're talking about AI?
It's crucial. Don't underestimate it. I mean, anyone can make promises, right? Especially in a field as, well, as hyped as AI. But have they actually delivered on those promises in the past? That's what you need to find out.
So look for a history of walking the walk, not just talking the talk.
Exactly. And look for signs that they're adaptable too, because AI is evolving so rapidly. A company that was a leader even a couple of years ago could fall behind if they're not constantly innovating, you know?
So past performance is important, but it's not the whole story. Adaptability is key in this space.
100%. Now, this brings us back to those megatrends we discussed earlier. Decarbonization, digitization. These aren't just buzzwords, right? They're the forces shaping the future, impacting everything. How can understanding these trends help our listeners navigate a world that seems to be changing faster than ever? What's the connection?
It's all about connecting the dots. Like you were saying before, everything's connected. For example, decarbonization, the push for clean energy that's driving huge investments in things like renewable energy, right? Solar, wind, all that.
Right, and that's just one piece of the puzzle.
Exactly. But where does AI fit into all of this?
Well, AI is being used to optimize energy grids, to predict energy consumption patterns, even to develop new materials for solar panels and batteries, making them more efficient.
So AI is actually playing a key role in the transition to a more sustainable future. It's like the invisible hand guiding us toward a cleaner, greener world.
That's a great way to put it. And that's just one example, of course. The interplay between these megatrends, decarbonization, digitization, and the rest, it's creating this whole web of opportunities and challenges across every sector imaginable.
It really is a fascinating and slightly overwhelming time to be alive, isn't it? So, learner, if you're feeling a little lost in the shuffle, remember, focus on understanding those megatrends and how they're all interconnected. Because once you see the bigger picture, things start to make a lot more sense.
Absolutely. It's like having a roadmap, even though you don't know exactly what twists and turns lie ahead.
Exactly. Okay, we've covered so much ground in this deep dive, learner. We talked about navigating a, shall we say, interesting economic landscape, about how the investment playbook is being rewritten right before our eyes.
And we dove into those megatrends that are shaping the future, not to mention the exciting and sometimes daunting world of AI and data.
It's a lot to process, but understanding the forces at play, as you've said so well, it's absolutely crucial. Whether you're trying to make sense of your own personal finances or you're navigating the ever-changing business world.
Knowledge is power, as they say.
It really is. And that's what the deep dive is all about. We want to equip you, learner, with the insights you need to make smart decisions. Now, before we wrap up, one final thought for you to ponder. We talked about data being the fuel for the AI engine, right? Well, who controls that fuel? And what are the implications of that control? Something to think about.
A very important question indeed. Until next time.
Until next time.